Welcome to Gold, Goats, and Guns. My name is Tom Luongo, and today we have the second in a series of conversations between myself and YouTuber Crypto Rich that I'm calling Decrypting Crypto. And we talk about a great number of things here. We recorded this on the 27th of June. It runs about an hour. I think it's an informative talk. It hits on a lot of the themes that we talk about here on this channel. The brewing financial crisis, why Bitcoin versus gold, or why both, and all of these things. And I think it's very important and potentially very informative discussion for those of you who are both kind of crypto neophytes and even crypto veterans. So hope you enjoy it. Let's get on with the show.
Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profit. I have with me once again Tom Luongo of Gold, Goats and Guns channel and his website tomluongo.me. And Tom, I discovered him via Zero Hedge. He is one of my favoritist gold, Bitcoin, alternative money, Austrian economics, political commentators out there. I subscribe to his channel. I listen to all his videos and stuff, and I recommend you do so as well. And this is our second video of an ongoing series, because I have written a smart contract that requires Tom to come onto my channel for these interviews. And you know, the blockchain goes on forever, right?
Oh yeah, no, and it's permanent. So yeah, absolutely.
That's right. So now, before I introduce Tom, I want to let you know this is not investment advice. Do your own due diligence and do not invest any more than you can afford to lose. All I'm doing in this video and all my other videos is sharing with you what I'm discovering as I travel along on the blockchain. And one day, as I was traveling along, not quite on the blockchain, just checking out Zero Hedge, I came across this article from Tom Luongo, and then another article from Tom Luongo, and I kept looking, oh, I like this guy, and then I go check out his YouTube channel, and then I reach out to him, and here you are. Hey, Tom.
Good morning, Rich. How are you, man?
I'm very, very well. It's afternoon where I am in the UK. I'm sitting in the garden.
I know. It's a rare sunny day in England.
That's right. That's right. There is a bit of a wind.
I'm in Florida. It's hot, and I'm inside. It's hot. It's sunny. It's steamy, and I'm inside. You know, the air conditioner's running, and I'm inside.
Yeah, you probably wouldn't need to be, because your computer would all melt.
Oh, absolutely. I would melt. Are you kidding?
All right, very good. So look, anything you want to say a little bit about yourself, and then we'll say what we're going to talk about.
Sure. Other than what Rich has already talked about, you can follow me on Twitter at TFL1728. Not that I use Twitter particularly heavily, but every once in a while, a good bon mot will come out. And of course, I also publish an investment newsletter aimed at retail investors that's focused on the geopolitics of money and Bitcoin and gold. It's the Gold, Goats, and Guns investment newsletter. It comes out every month through Patreon, and you can find that at Patreon/Gold, Goats, and Guns.
Very good, very good. And I'll have all the links in the description below. And do go and subscribe to his channel, and do go check him out. And what we're going to talk about, one thing I'd like us to touch on. One is I'm going to tell you what's happening with me in YouTube.
Mm-hmm.
I think we should mention very briefly, although we didn't discuss it in the preamble, is the Facebook Libra coin, right?
Right.
We're going to talk about gold as money and Bitcoin as money.
Mm-hmm.
Why some gold bugs don't get the validity of Bitcoin.
Right.
We're going to talk about Brexit and its exit, plus anything else that takes our fancy as we travel along on the blockchain.
Okay.
Yes? And
yes.
This video, by the way, is going to appear on my channel, and it's also going to appear on Tom's channel.
Mm-hmm.
And you could subscribe to both and comment, like, all that stuff. Very good. Very good. So, Tom, I want to start by telling you what's happened with my channel. During the first, I got an email, because I know it's one of the things you talk about, right, on your channel. During the first, I got an email from YouTube saying that one of my videos found it violated content violations.
Mm-hmm.
And when I looked at community guidelines, it was mostly about sale of regulated goods, which are guns, gambling, arms, drugs, none of which I cover in any of my videos.
Right.
And it didn't mention cryptocurrencies or Bitcoin. And then I got another email about another video. Then I got another email about another video, and I appealed, and then I lost the appeal. And then they said, because I've had three violations, I can't post any videos for a week. In the course of that week, they deleted 80 of my videos. Yes. You didn't know that, right? I didn't tell you that in the preamble, right? And some of the videos, some of the, I cover ICO projects. Some ICO projects have succeeded, some have failed, right? Some turned out to be scams where I got scammed and I didn't know, right? Some were mistakes I made in my own investing, and others were legitimate projects. And I do sponsored videos and non-sponsored videos, and I do informational videos, and I do a little bit of technical analysis, although I'm nowhere near an expert like I think you are, right? They deleted a video with the CTO of Komodo. It was an unsponsored video. And all I was asking him about was about Komodo's smart contract functionalities.
Right.
Deleted. I recorded an interview with Reggie Middleton in 2017.
Right.
I posted the video in 4 parts, part 1, 2, 3, 4, in the summer. I posted it again in the winter when I was on holiday. They deleted part 3 of the second batch. They deleted a video about how to keep cryptocurrencies safe. They deleted videos where I talk about, oh, Bitcoin's done this. I think it might do this. Just my opinion. Delete. Right. They deleted videos on completely legitimate projects, right, like Spectre, like Electronium. Now, whether or not you think they're going to go anywhere is another matter. But they're real companies building projects. Right. Deleted.
It's like saying we're not allowed to cover an IPO in the gig economy. Like, you know, somebody's like it would be insane. It would be like saying, like, you know, the apocryphal, like pets.com. We can't talk about, you know, if they were to resurrect themselves and try that again, or the .com bubble. Like, we couldn't like make a video and say that's a scam. Yep. or whatever. Right? We can't do that. You know, only that's insane, and that's well beyond.
There's more.
Yeah, that's well beyond the whole well beyond, you know, my corner of the internet, which is the radical politics, right? Which is where I'm like, I dip in those waters all the time. And at the same time, you know, I've also talked about this on my channel, which is part of the reason why my channel is not monetized at all, right? I refuse, even though I have more than enough subscribers and more than enough views to apply for monetization. And I just said, I don't want to do this. I don't actually want to open myself up from that perspective. And like, if Google doesn't care, if all I'm doing is using Google's bandwidth, I'm going to hopefully stay under the radar for as long as possible and just build my business. And the YouTube channel is just there to support the people that I garner on other platforms. Yep. Because at this point, that's all you can really, a person like me, that's all I can really do. And I can tell you that looking at the changes in the search algorithms, I can tell you that traffic that's come to my site to Zero Hedge, and the relationship between hits to visitors has gone completely nutso. Even as I get more search engine hits, I'm getting, you know, I'm getting less stickiness. And yes. I think there's something else. I think there's something going on there as well. So, you know, they're funneling the wrong people to my site on purpose. You know, they're doing all sorts of things. So,
well, my views are way down. I posted videos before about Flashcoin. Flashcoin is a community coin, decentralized. They're giving away their coins. I'd get 300-400 views in the first 24 hours. And I'm getting, since my channel's gone back, I'm getting half views. My Electronium videos, I'm getting less than 1,000 in 24 hours, where I would get thousands.
Right.
So I think I'm being shadow banned. I have demonetized, and I was only getting about $2 or $3 a day anyway.
Right.
I did it about a month.
I mean, how much do you actually make? I don't know how anybody actually makes money from Google in the first place. They take 90% of the money. So
yeah, the millions of views. So one of the things that I've done, I haven't, Tom, started using. I use Brave browser, but I haven't got myself verified and all of that, and asking for Brave. I'm going onto the BitTube platform, which is a hybrid decentralized platform.
Yes.
And they've launched a beta, and I've done a couple of videos about that this week and stuff, and you know, people can go and check that out. And there's a few others like DTube, which I don't particularly like. I don't do live streaming like you do, so DLive is no good to me.
And DLive seems to already be compromised. I don't think they're making any money, and I don't think my last 3 or 4 streams have actually gone out over their server.
Right.
Because I don't, you know, I mean, I don't even think that's going on at this point. So I don't know what to do with them. So I'm about ready to kill that off. That was an experiment, and that quickly died. So
you should check out BitTube, and if you want, I can put you in touch with the CEO.
Yeah, I've been recommended BitTube to me a couple of times now, and I haven't, and I think I looked into it briefly, not for any other reason, and I didn't go any further simply because I just didn't have time, or I'm not sure if it's at my schedule or whatever. It's just one of those things. It's like It's on the list, of things to do. It's on the to-do list, and that to-do list gets longer every day, right? So.
Yes. So Tom, and one of the things I've heard, and I've been wanting to say this to you for a while, right? Let you know, because I know you talk about censorship and shadow banning and everything, right? And one of the things that that I've heard is that the comments, the algo has changed so that comments count for more. I've just been told by another influencer. Okay. And some other crypto influencers have told me they've noticed a drop. And another crypto influencer has told me he's had a strike as well and he doesn't know why. I mean, videos that have been up for 18 months. Right. It's insane.
And interestingly enough, I go on my live streams. I post them up. I swear like a sailor. I talk about all sorts of horrible, wrong things, style. And I never get man, I haven't been banned, but again, I only have 2,600 people following me, so it's not like I'm not. They've already cordoned me off to stop the growth ages ago because I saw it coming, and I could see like things were happening, and then all of a sudden I slipped through, and people were showing up in the channel that shouldn't be, and I getting all these people signing up, and then they would just stop, and every time they would. Every time they would change the algorithm, it would stop, and then something else would happen. And I frankly am just not savvy or care that much about trying to game the algorithm, knowing that quality will eventually, people who are interested in the information will eventually find you through word of mouth, through whatever, because because people are searching for particular information. Yeah, I do fundamentally believe this, and that you try and stop them from finding it. Eventually, they will come up with other tools to find it. They'll talk to their friends. They'll talk to this because it's a decentralized world, and you can only stop the flow of information to certain sources from certain sources so much. And as a friend of mine put it to me, a couple of weeks ago, don't kid yourself. They're going to escalate from here. And he said it, and it was very pithy. He said, "Look, we're 6 months away here in the United States from no pizza for racists, right? Like you're not going to be able to order a pizza from Domino's or Papa John's because you said something wrong on Facebook, and that's going to be that." And I'm like, I think that's coming, and I think it's only going to get worse from here, and it's going to make it very difficult for people to continue to build small businesses on the internet, and that we do have to be careful about this stuff at the same time. And that's their goal, is to get us to think, "Oh, should I say that or shouldn't I say that?" No, you have to say what you're going to say because it doesn't matter. You're going to lose your audience you're going to lose your existing audience if you stop saying stuff, and you'll never gain a new audience if you try and find those other people because they're not committed, because they'll know you're lying. Yep. And they'll know you're holding back. So this is a very intimate format. You can't, there's no filter here. You have to be honest, and that's it. It's your only option. So.
Just a couple of things. So one is when I did a video explaining BitTube and what they're doing, I looked at the Google trends for YouTube. It's been going down the last 5 years. And DTube and BitTube, which are much, much bigger than the other, they're going up steadily. And I think that's just going to continue. And then what you said about racists not being able to order pizza and everything, I think is crazy. It's insane. Of course it's crazy. Something in Zero Hedge today about how in France, Facebook is now going to start reporting hate speech acts, like as if someone's going to plot a murder, right, or a terrorist act or something.
We're into pre-crime now. We're into Minority Report. It's already here, and that's part of. I have a real hard. I mean, this is where we start getting into Kookland and the hardcore conspiracy theory and stuff. But let's not kid ourselves. The people who are behind all of this are the people who want to maintain control. It is in their best interest to continue to maintain control. This is something I talk about all the time on my channel, be it from geopolitical perspective or the markets or this or that. And they're also all really the same thing. And that once they feel that their power is slipping, remember, the more power you accumulate, the more paranoid you become. Okay, because you could lose, because any loss of power is a potential loss of everything, because you become less responsive to the people who made you powerful in the first place, and now are only interested in maintaining that power as opposed to doing the things that allowed you to acquire that power in the first place, which is serving your customers. Okay, and YouTube and Google have crossed that Rubicon a long time ago. So did Facebook. So I'm of the opinion that Facebook would never have gotten to where they are today without specific Wall Street players and without particular would-be oligarchs. I call them the Davos crowd, that put the money in and organized the freaking company. from help Zuckerberg organize that company in a particular way to get it to where it is today, and then become the massive data vacuum that it is. There's too much. There's too much smoke there relative to the IPO and the people who were behind it and all of this stuff going back to that time. I think between the venture capital that went into Facebook, the people who were behind the IPO and all of that stuff, the multiple book runners across Wall Street, that the whole thing was always designed at some point to get to this point.
Right.
And then, at some point, like Frank Zappa said a long time ago, they allow you to think that you've got that the movie's great and you're here voluntarily, and then they turn on the lights and you realize that they've blocked the exits and you can't leave, and then the guns come out. We're paraphrasing the great Frank Zappa quote. And I think that's where we are, and that's what they've done. They've flipped the switch and they've let us know, oh, by the way, we have all your data. We own you now, and we're going to use you not only for our own purposes, but we're going to abuse you if you step out of line. So I listen to these guys on Zero Hedge commenting on my articles, complaining about the Chi-Coms and their, the Chinese communists, they call them the Chi-Coms, and their social credit system and all that. I'm like, what? You don't think that's already here? Like, you don't think Facebook is isn't designed as a complete social credit system? I mean, that's what Facebook's Libra coin's all about too. Yeah. Because if you don't think that the whole no pizza for racist thing doesn't stem directly from being able to use Libra to order pizza from Domino's that's cleared through Visa and the whole thing's cleared through Visa and their banks, and they go, we don't like what you set up on Facebook, you're done. You can't order pizza. You can't have this. You can't have a life. You can't have a job. You've got people now not being able to get jobs because they said the wrong thing on Twitter.
Or the guy that Jimmy Dore covered in some shooting, and he made some comment when he was 16 and stuff, and then Harvard refused him admission. I mean,
right. The poor kid Kyle Casho. So it's like we're all expected now with a life that is lived publicly to then all be judged at the same level all day long as people running for political office. So it's like the entire internet tech company is now your controlled oppo research firm against all of us. Orwell called it the panopticon. I don't even think he understood how much control these people think that they're going to exert over us. The thing that scares me is once people have got two choices, they're either going to get angry or they're going to accept it. And I don't know what's going to happen here, but
I think there'll be both. There will be acceptance, right? And then then there'll be anger, and then the anger will grow as people get more and more crushed, because that's the whole deal with human history.
Of course.
Right? When people get crushed and crushed and crushed, at some point they turn around and say, enough, we're not having this, and then you have violent revolution, right? Now, let's, if we can move this on a little bit onto Facebook coin.
Sure.
Right? So I like I said in our previous video, I don't know if I said it in our previous video, I haven't used Facebook for several years. I can't remember how many years ago, right?
I permanently deleted. Well, I officially deleted my account finally about 2 months ago, and I only kept it around just to coordinate with some friends who refused to get off of it. And that's like my only part of my social life outside of doing this stuff. So I kept it for a little while, but now I'm just done. And my wife preceded me by about 3 months. So we're both post Facebook, and I remember, and I've been writing about the post Facebook era since 2017.
Right. Okay. Now, I'm not interested in Facebook Libra. I am interested in the ramifications and what it might do to the cryptocurrency space. And I heard something on a YouTube video, I can't remember which one, where this commentator was saying, and it ties in with what you said earlier, is that the Facebook are doing it in alliance with banks and governments. Because of all the quantitative easing, it becomes somewhere to park all those useless bonds and all that useless money they're printing.
That's one way of looking at it. The other way of looking at it is that when the whole thing, I've talked about this on my stream as well. So I am a student of Martin Armstrong, the great cycles economist and trader. And I don't always agree with Marty, but I take him very seriously. But I don't always agree with his conclusions of the things that his system is telling you. And Martin's talking very specifically about this is the kind of what Mises would call the crack up boom of the public wave. That for the last 309-year cycle, this has been a growth in people's acceptance of public assets, of the public sphere. That's been in ascendance psychologically for the last 300 years. We're reaching the end of that cycle, and the end of that cycle starts with the end of that cycle really begins and peaks in the next year or two. Right? I don't remember quite when everything's supposed to turn, but we're in that mode now. We're going to move from public assets to private assets.
What do you mean by public assets?
Public assets, government-backed fiat currencies, sovereign bonds as wealth.
Right.
Okay. Public assets, public institutions. We have faith in this. It's like we're living through the last gasp of the age of the state can solve our problems for us. The promises of social democracy. I wouldn't even call it Marxism at this point. I think social democracy is actually closer to what we do. But really, at the end of the day, I'm very reductionist about this. I just think they're all freaking Marxists anyway. But that's me being a radical libertarian. But let's be politic about it. But let's be politic and let's call them social democrats, right?
So I just want to say to people who are watching, right, is that I would position myself politically at the other end of the spectrum, right, as Tom. Right. However, here's what I've found, right? You go all the way around and the anarchists meet the libertarians.
Well, yeah, because real anarchists and real libertarians are anarchists. It's just
the same, right?
The only difference is not in conception, but in operation. It's different specification and implementation. What's the process by which we're going to get to a functionally anarchic community? Is it going to be through state intervention? That's what the leftists would argue, and the libertarians would argue, no, the opposite. It's decentralization is going to get us there, and anybody who's heavily down the crypto path will eventually realize, I'm firmly convinced that all we're doing now is just arguing over definitions. Yes. And I have Dustin definitions, and I can care less about that. I can care less about the Dustin definitions at this point. All I care about is people who are on the right side of the argument, and they're moving in the right direction, and they're moving my agenda in the right direction. I don't give a crap about anything else. So. Anyway. Back to the public-private wave thing. Yeah. The faith in our government institutions is failing. You can see it happening every day. We want to talk about Brexit. We want to talk about Italy. I have to call it Italy, not Italexit. I think Italy is actually funnier. And I think Departugal is the funniest one of the bunch. But
we got to mention that. I don't know.
No, that's not actually happening. I just think that's a really cool name. If Portugal would actually leave the EU, it'd be Departugal. I think that one's just really funny. It's really imaginative. As a former poet, I love wordplay. So, but the faith in public institutions is failing. And when the financial crisis in 2008 broke the monetary system, the existing monetary system that was kind of cobbled together after Nixon closed the gold window in 1971 broke in 2008. And all they've been doing since then is the central banks have been just dumping tons of money in the system to keep everything papered over until the day when that illusion will collapse as well. And when that collapses this time, that will be the final straw, because this problem will be bigger than the central banks. Mm-hmm. Okay. And this will take down people's faith in central banks. And that's what's driving Bitcoin. That's what's driving gold. Okay. And gold as a market isn't moving at the same rate that Bitcoin is at this moment, simply because of the differences in momentum and the difference in the structure of the markets. Bitcoin is a freer market. There are fewer restraints on the synthetic short supply against it. What I mean by that is paper settled futures markets, right? In gold, there's about 100 or 110 ounces, I'm not sure what the numbers are today, of paper gold issued in futures contracts versus the actual physical gold that it would settle in, that it represents. So the gold market is levered up 110 to 1 effectively against the actual physical supply. And if all those future contracts were to actually, if people were to stand for delivery, the whole gold market would collapse overnight. Gold would shoot to $15,000 an ounce, and there'd be mass hysteria, because then people, interest rate swap derivatives would collapse tomorrow, right? And the whole system would collapse. And there's a number of vectors in which that same scenario just spun out. It could be, the default of 5 Turkish banks. It could be the default of Italian banks. It doesn't matter. All the interest rate, the $1.2 quadrillion interest rate, or $770 trillion interest rate swap derivative market is actually the ticking time bomb. And everybody's hedged against everybody else. And if at the end of the day, if one side of the trade can't pay, all of a sudden everybody's liabilities go from a minuscule amount to the written face value of the contract. And and you have to understand that that's what has everybody spooked. But and that's I should probably just do an entire live stream about this one night. I may even do that tomorrow night, now that I think about it, because it's actually nearly really relevant now. And we're recording this on the day before the end of the month. So we're recording this on the 27th. So So look for that if you guys watch this.
Mhm.
But the takeaway here is that when this fails, everybody's faith in government's ability to come through on its promises will collapse at a societal level, at a psychological level. And what we're seeing now is in the markets today, as you and I record, is the mother of all what we in the markets call safe haven trades. That's where people looking for safe haven assets, safe harbor assets that can protect them from a coming storm. And at this point, those things are gold, U.S. Treasury bonds, German bunds, Swissies, Swiss franc bonds, the dollar, depending on where you're positioned, right, and how much debt you owe in dollars, and U.S. equities are rapidly becoming those. And then I would add, absolutely, the cryptocurrencies.
Okay.
The cryptocurrencies are becoming a massive safe haven trade. If you look, published an article last week showing since March, the rise in Bitcoin mirrors the rise in the price of a U.S. 10-year Treasury note, which is the deepest, most important, most systematically important market in the world. There is no more important market in the world than the U.S. 10-year Treasury. So many, everything, the whole world is indexed to either the 2-10 spread, the 10-year itself, or the 2-year. The whole thing is, the whole mortgage market is based on it. Everything. And Bitcoin and the 10-year are moving in lockstep with one another. And if that's the case, then Bitcoin has become a safe haven asset. As people worry that their governments are going to come down on them, they're not going to be able to allow them to move money. They're worried about the devaluation of their own currency, all of those things. And so that's coming. We're in the middle of it now, and we're in the second or third inning of this. We haven't even begun to really collapse yet. If you look at what's happening on the left in the United States and how far left they've pushed for universal health care and all of these things, the collapse and the rise of the Greens in Germany, for example. When you look at what's happening, we're still not there yet because the system hasn't collapsed. Mm-hmm. Because the system hasn't collapsed yet, there's still this last hurrah of the Social Democrats to try and maintain and wrest control of this of the corridors of power again. And by that I mean people like George Soros and Tom Steyer and all the Davos crowd and Facebook. Bringing all this back together, and that they want that control, and that control is slipping away from them by degrees. Now, Libra is not a real cryptocurrency. No, it's Ripple with central bank backing. It's worse. It's worse than Ripple, actually.
With surveillance.
Right. Yeah, of course it is. Absolutely.
Surveillance. They'll know when I'm spending what, where, why, how.
Right.
Oh, it's frightening. Now, but now you said that I can get gold as a safe haven asset. Mm-hmm. Get Bitcoin as a safe haven asset. I can't get the others because they're all derivatives. There's nothing real behind them.
I understand that, but it's the way the markets are structured legally. At this point, it's not that it's not. You're right. I'm not disagreeing with you. I'm saying is in terms of market perception today, right. The psychology of the market is that, and the way. I mean, do you have any idea how prospectuses on like most of these open and closed end funds are, or these pension funds are, what they're allowed to invest in? Right. Like they're not even most of them aren't even allowed to hold gold. They're not allowed to hold they're even allowed to hold X amount of cash. Like we are not. I mean, to say the fund manager has to say you're not allowed to. Because I've done this. You're not allowed to hold more than 2% cash. You have to put all the assets to work. So you're bound by your prospectus and your fiduciary interest. Your fiduciary requirements and obligations to go invest in something. Well, okay, I'll buy the U.S. Treasury. Right. I'll buy a German bund, trading at minus 0.6%, because better that than the risk of putting it in the commercial paper market, trying to get in some junk bond getting 7% and the company going bankrupt tomorrow. Because that's what's going on. That's where we are. That's why the yield curve is inverted across the board. It's why LIBOR's gone LIBOR's inverted. We're done. We're 6 months away from something.
Whoa. LIBOR is inverted. That means negative.
Yeah, the LIBOR curve inverted last week. Yes. Yes. So, and if you know anything about history, the LIBOR curve inverted in December of 2007, and by 2008, we all know what was happening. Bear Stearns blew up.
In simple terms, for those of us that don't know what LIBOR is, it's the
London Interbank Overnight Rate, LIBOR, right? And everybody has a LIBOR rate in their currency. And understand that a bond curve, simple interest rate theory, going back to basic economics, is that the longer that I I am deprived of using my money by lending it to you, the higher the interest rate I should be receive in return because my risk rises, right? So if I'm only lending to you overnight, I may only ask for 0.5% on the money, and I'll get paid pennies on an overnight. And if you pay me back, and if you don't pay me back, well then we'll continue to rise that, or we roll it out to a 7-day contract where it might be 0.6%, and then a 30-day contract maybe 1%, and then a 5-year contract maybe 2.5% or 5% or whatever it is, and it should be an upwardly rising yield curve, and it should look kind of almost like like an exponential curve, right? It should be steep at first, and then we don't have that now. We've got what looks like a cup, right? A handle and a cup, and it's terrible. And when it inverts, that means that demand for money farther out in time than today is higher than it is today. Or that's one interpretation. The other interpretation is that there's rising rates in the short term, mean that demand for money right now, I'm not willing to part with my money because I need it to lend to you overnight. So the short-term interest rates rise while no one cares about the longer-term rates, and that's because there's no market for the longer-term paper. Everybody's crowded into the short end of the curve,
right?
And
because of uncertainty,
and they're having to bid, and then you, who desperately needs the money to cover some obligation for some other derivative that you hold because you owe somebody money on an interest rate swap, or a gold your gold futures trade when your gold futures short went bad, and you owe some guy $50,000, so you're going to come to me and go, I'll give you 8.8% for an overnight loan. I'll pay you back tomorrow. Well, no, I need 2%. What? 2%? Oh, I get it. And then somebody else comes in. No, I'll give you 2%, and the bids go up, and that's why curves invert. And when LIBOR inverted last week, Jeff Snyder at Alhambra Partners was writing about this the other day. Mike Shedlock picked it up. Zero Hedge picked it up. I noticed it. I didn't notice it myself. I had one of my patrons sent me a note, literally sent me a note saying, "Oh, by the way, did you note that the LIBOR also inverted?" I went, "Well, that's bad." That's all I said to him. I said, "Oh, that's bad." And then I went about my day. I'm like, because we were doing, that was happening. I found that out the same day that Iran shot down this drone. So I had other things on my mind at that point. But yeah.
Tom, I have to stop. There's a few things I want to say, right? One is I learned so much from you, right? I don't have the financial training that you have. It's like there's just this.
Just understand, for the crypto guys in the audience, you're on the right side of the trade. That's really what this boils down to. It's really not that hard. Just stay in high quality assets. Now, if you want to talk about what this,
there's something else. If I can break it down a little bit, right? I don't understand all the details of different ones and all that stuff, right? And I don't even need to. It's like my doctor, and my doctor says your blood pressure is 180 over 140.
You're gonna die.
That's okay. I don't know how it works out, but that's not good. So I get the LIBOR rate inverted is really, really bad.
It's really bad.
Really bad, right?
Right.
So then the crypto people like myself, like you, like others watching this, or those that are about to be crypto people, and also the gold bugs, they move to safe haven trades like gold and Bitcoin.
Mm-hmm.
Except there are some that don't move from gold. They don't diversify to Bitcoin. Now, the advantages of Bitcoin and why it's easier is I can buy 1/100th of a Bitcoin much easier than I can buy 1/100th of an ounce of gold.
It is hard.
I mean, the gold sovereign coin.
So there are tokenized gold services out there. There's like Gold Money and other ones out there that you can do that with, and I don't dissuade people from looking into them.
Sure, but it's not the same as actually owning the asset. No,
it's not.
The most liquid gold coin in the world is the British sovereign. Thank you to the days of empire, right? And that's about 240. I haven't looked the price for a few days.
Oh no, they're 0.2. I know. I own a lot of British sovereigns. They're 0.2354 per ounce. So they're trading ounces. So they're trading around $350 per $300. Yeah, they're well over $300. I think. Yeah, $1,400 gold. They should be close to $300 per.
Right, and you can get a quarter sovereign and a half sovereign, but they're not as common as a full sovereign, right? So essentially, I would need $350, but with Bitcoin, I can buy it's $10 amounts or $50 amounts.
I mean, you can buy 10-ounce coins and whatnot, but I don't recommend them because they're not even. I don't recommend them. I do and I don't. But they're not as liquid. Your point is absolutely well taken. That because of that, Bitcoin or Litecoin or anything else, if 1/100th of a Bitcoin is too expensive for you, you can buy 1/10 of a Litecoin, right? And or whatever. And the point being is that the infinite fungibility. And fungibility meaning divisibility. The infinite divisibility of the crypto assets makes them actually far more attractive from that perspective. It's one of the reasons why gold was eventually demonetized, because we couldn't do exactly what you're saying. We couldn't pay for candy bars with gold. We couldn't live our lives on a day-to-day basis with gold. We then would have to go to a bimetal system or this or that. Eventually, we had to just
have
take an ounce of gold and then issue dollars such that it would rise to reflect this how do I put this, the sophistication of the division of labor. We have to be able to express all the potential trades and all that resolution from the smallest transaction to the largest transaction in one currency. And that's very difficult to do because it stretches across multiple orders, a dozen orders of magnitude, right, in terms of value. If you really think about it, everything down from 1 cent to $1 trillion, right? That's like 12 orders of magnitude or 11 orders of magnitude, whatever it is. It's huge. And that you need that kind of resolution to be able to properly then affect the trade so that people can trade without having to overvalue one side of the trade versus the other. And so gold doesn't form that function anymore unless you tokenize it, stick it in vaults, tokenize it, and send it out on the blockchain. Well, then that's a different story. And I'm all over that as well. And I think that, tokenized gold or tokenized silver or whatever, I think is a perfectly reasonable idea. Only problem is, of course, now you're putting hundreds of tons of gold in a vault in some place, and that's a target.
Counterparty.
And the thing about Bitcoin is that there's no target. There's no single point of failure.
There's no.
And the purpose of decentralized systems is to move away from single points of failure, to make the systems anti-fragile, as Nicholas Nassim Taleb would say, and not give them any one place to take out. Because if you're going to build something that's a competition to the existing political and social power structure, then you can't leave them an obvious target to bomb, metaphorically speaking. And so that's what scares them about Bitcoin. I tell these gold bugs all the time. I look at them and go, dude, they've been trying to get rid of the Pirate Bay for 15 years. They haven't succeeded yet. What makes you think that they're going to get rid of Bitcoin?
That's
right.
They'll
shut the internet down. Like, okay, well then all their power goes away.
Whoa, hold on.
Bitcoin is predicated on the
How am I going to get water through my taps if they shut the internet down?
Exactly.
How the light's going to work? They'll have writing in the streets.
Oh, I know. I listen to this stuff and I'm like, are you kidding me? I mean, that's what you're planning for? Well, then fine. Go prep yourself into oblivion. I get there's hundreds of thousands of acres out in Idaho and Wyoming for you to do that, and go scratch out a living out there. Bonsai. I mean, I nearly did it myself. I half did it here in North Florida. But I also came to the realization that that's not what's going to happen here, because the people who are in charge want to maintain their power. Okay, and they don't want to be king of the ant pile.
Yep.
Okay. But they're going to threaten us with moving us back to ant pile, to living like ants, if we don't allow them to stay in power. We have to ignore those threats. We have to realize that those are the threats of a paper tiger and a bully. Okay. And I could bring up the Iran drone shoot down the other day, and I could make that same argument about the United States and Iran, but I'll leave that for my channel.
Wait, let me just say something about that. Let me comment on that, right? Because I listened to that today before we recorded, right? And the picture that I had is is a metaphor of playground bullies.
Yes.
The US is the big, arrogant bully that nobody really likes, and then you might have a few that like the UK going along. Like Goyle and Crabbe in Harry Potter.
Absolutely.
Right?
Oh, yeah,
and then you've got somebody with dignity, with gravitas, with some self-respect, like Putin. Whether or not I agree with his politics, the man's really great politician.
Absolutely.
I listened to his speech to the United Nations a few years ago. I was blown away.
That speech by Putin was a turning point on Martin Armstrong's. Remember that speech happened a day and a half before Putin intervened in Syria, and that happened to the day of one of the turning points. That was the turning point that Martin Armstrong's computer said was going to happen on 2015-75, which would be September 30th / October 1st. Something major was going to happen, and it was that speech on the 28th before the United Nations, one of the most brilliant political speeches of all time. It will go down in history as one of the turning points in human history. Because it was the day that he said, "That's enough. No, and
Well, I
the
remember
United
the
States, and he said it. And he said it in the United Nations, and it was one of the most beautiful speeches I've ever heard. Someone needed to say.
I'm going to dig it out and link it below. And I remember his comment. Do you know what you have done?
Yes. Do you realize what you have done? Because I do not think you do. It was that is the line. I wrote an entire issue of my newsletter when I worked for Newsmax at that time. I titled the issue, "Do you realize what you have done?" That was the title of my newsletter. I knew exactly how. And my editor, who's an English lefty, was a little worried about that. A little worried about that, about going that route, and she didn't agree with me. And then I turned out to be. And then by the time the issue published 2.5 weeks later, they had already blown open all the narratives in Syria and had already taken back swaths of territory. And she just looked at me. She went, "Tom, I don't know how you did it, but it's brilliant. And I can't argue with you." And I'm like, I don't do a very good English accent. I certainly don't do her London accent very well. So I believe me, I've tried over the years, but I can't do it under pressure. So I'm just not going to try. But yeah, and she's a lovely lady, and I still work with her today. And she but that moment was a very, very powerful day.
Yes,
I remember it.
So then back to the playground, right? Now,
sure.
So I just want to share something that goes on with me, right? When I'm listening to you, I'm like, Tom, I want to be like that with you. Tom, there's this, right?
I know.
But anyway, so then you've got someone who's got some self-respect, who's like, we're not going to put up with this. And then the US, this bully, bravado, they're bluster, they're bragging. They know it ain't going to fly with this one. Mm-hmm. And there's more and more of those gathering together.
Absolutely.
It's like going to war with Iran.
When Putin said no in Syria, when Putin said no about Syria, he gave spine to the previously spineless, is the way I put it before. When you show the people the way to resist the bully, then they get stronger.
Yeah.
And there's not a generation of people on the planet today, other possibly the Iranians, than the Russians who lived through the Yeltsin years. These are the people who went through an abject collapse of society far greater and far worse than the Great Depression in the United States, which forged those people into a fighting force to fight World War II. That we had never been that hard as a country. Same thing, but an order of magnitude worse, which was, by the way, fomented by the very same people we're fighting today. Okay, the Wall Street and the Davos crowd was to put a plan together to rape Russia dry, and it was terrible. And they almost succeeded. If not for Putin, they would have succeeded. And if not for Yeltsin waking up at the last moment as well. But that's again another story for another day. But understand that when it's a Nietzschean universe, hate to admit it, but it's true. That which does not kill us, makes us stronger. And those people are hard, and they're committed, and they don't realize how committed they are, but they're committed. And Putin came through a trial by fire before he took office, and then he's been nothing but a trial by fire for the last 20 years while he's been in office. And I'm hard pressed to believe that he's made very many mistakes.
No, he's really
for the Russians. He has made some mistakes, but nothing strategically crippling. Minor mistakes here or there, fine, but nothing strategically crippling.
And
not like us.
It looks to me like them and China and Iran are playing the long game. And just about Iran, right? The US has not been able to defeat Afghanistan, one of the poorest countries in the world, even before the war started. Forget it about Iran.
40 years going back to your people in Afghanistan. We've been screwing with that place.
Yeah.
I mean, right? Remember Sherlock Holmes? Watson came home from 2 tours in Afghanistan with a limp, right? I mean, this was Conan Doyle writing about this back in the turn of the century, the turn of the 20th, or before the turn of the 20th century. So this has been going on for over 140 years.
But my point is that Iran is not anyway like a walkover like Iraq was,
right?
Or wasn't, or Afghanistan hasn't been, and Syria.
The only option for the United States at this point is to literally bomb Iran back to the Stone Age.
But that wouldn't work.
And at the end, well, it would work in the short term, but it wouldn't. But it would take. But all that stuff I talked about earlier about the derivatives and all that stuff, that would all explode, and everybody. And so when bombing Iran, you bomb yourself.
Yeah.
Okay, it's no different than Trump's tariff policies. These are financial weapons that go straight up and come straight back down again. This is clear as day, and all economic theory. It's all nonsense. At the end of the day, I've been saying this before, and I'll say it again. And I don't want to really rant about Trump too much, but the truth is that I wish he was a better person. I wish he was smarter. I wish he was not an economic ignoramus. I wish he didn't have a 17th century view of trade. I voted for the man, but he does. He is who he is, and it's the end of it. And he's an unrepentant narcissist, and he doesn't get it.
Somebody smart, or even as smart and savvy. He
is smart. He's like everybody else is a product of his imprinting.
Right.
He's a product of his breeding. He's a product of his imprinting. He's a product of his experience. Okay, and his imprinting is America great. The world isn't, and the whole baby boomer generation has that imprint that they're going to remake the world in their image, and they're going to force the world to be better. And it doesn't matter who you're talking about from that generation. It's their whole generation here in the United States. And if you look at it, and I'm not boomer, right? I'm freaking Gen X. I'm as quintessential Gen X as they come, and I'm looking at you people going, "You've ruined the world, and now we have to pay for it." Yep. Okay, and so we created Bitcoin. Just stop it all.
But okay, I'm going to be devil's advocate about Bitcoin, right?
Sure.
Bitcoin isn't real money because I can't hold it. And by the way, just so you're watching, right? I don't agree with what I'm saying.
I know you don't. You're playing devil's advocate. Go ahead.
You know, it doesn't have physicalness. There's nothing to back it, like gold.
Well, there is, and in the same way that you and I talked about before we went live. Or electron, I just like break it right down the brass tacks at this point, because I'm at that point. I've tried the encrypted TCP/IP packets. Do they have value? Well, it depends on what we're talking about. We're talking about IBM supply chain information. Well, it's got a lot of value, right? And if it's, hey, what are you doing tonight? In a text, not a lot of value. Can't really tokenize, the text between two 16-year-old girls. Oh, he's cute. It's like there's not much value there, right? Okay, fine. If they can have value, then have antecedent commodity value, and therefore they could rise to the potential to have money if they're organized in a particular way that would then bring value in such a way that you could trust the information that was inside of it. Because if you look at the truth of the matter is that what people are looking for, they're always looking for a way to store value in some way, even if it's a volatile store value in a way that is trustable. Right? That's what the blockchain does. Blockchain, it creates trust. That's what gold does, because it's got no counterparty risk. All the stuff we talked about previously, it's all about counterparty risk. I owe you, who owes me, who owes Jim, who owes Bob, who owes Deutsche Bank, and oh my God, everybody explodes. Now always remember the first axiom. When you owe the bank $1,000, it's your problem. When you owe the bank $1 billion, it's the bank's problem, okay? Because then the bank can't balance the sheet and it can collapse. So counterparty risk is the problem. And what the blockchain, what Bitcoin does is it removes counterparty risk, and it digitizes that process of creating a digital asset with zero counterparty risk. Your counterparty risk is somebody breaking into your home to steal your paper wallets or steal your private keys. That's it. Okay, the same way that holding physical gold in your house, they can steal the physical gold out of your house and steal it from you. I got news for you. That's your single point of failure, as we talked about earlier. It doesn't matter if it's a gold vault, the map to the gold buried in your backyard, or your paper wallets, and that's that. Or even if you don't have that, your single point of failure is if you memorize all your freaking keys, they're in your head and you can get run over by a bus. There's always a single point of failure, but there's no counterparty risk. You're the guy in charge of that. And this is what the gold bugs refuse to wrap their heads around. And they just think that this is some kind of Ponzi scheme, when it's not a Ponzi scheme, because you're not creating value on the basis of previous value. You're not creating zero value and issuing more tokens. You're issuing more value. They're issuing new tokens at a particular rate based on the work that was done by manipulating this code and that electricity to solve this proof of work hash, and that's real work. Like it or not, you don't have to agree. You don't have to believe that it's anything more than, you can have the opinion that it's digging a hole and filling it back in again, that it's make work. And I would argue that, well, really, but people are using the network to transact and move money around in real time. And those transactions represent real value exchanges between people who are moving real goods and services. So how is that not a money?
Well,
that's all money is.
There's the money, like if you were to deposit £100 into my bank account, right? That's a digital asset. The risk is it's counterparty risk.
Counterparty risk is that the bank goes busto, and as a depositor, you are an unsecured creditor of the bank, and this goes back to the Magna Carta.
Okay, and also it's inflationary because the government keep issuing more pounds and everything, and through fractional reserve banking. So
Right, and then there's the other ways of doing it.
you could transfer £100 worth of Bitcoin or 100 Bitcoin to my wallet, and if you're going to transfer 100 Bitcoin, I'll give you my address, Tom. Right? But
You and me both. Yeah.
you could do
Get in
that.
line.
You could do that, right? And then there's no counterparty risk. It's not to be inflated away. I can pass it on to somebody else because it's fungible. I'm not dependent upon a third party.
The only worry is the lack of trust. If the network gets hacked, taken down, so those are your potential single points of failure. And as we addressed earlier, the idea that modern society could function in any way, manner, shape, or form without the internet is insane. And here's the other thing: you not only do you take down Bitcoin, but you take down the entire financial system that exists today. Basically, it doesn't function without the internet. And so, again, here's the thing: that system is. This is a great point that Caitlin Long brought up in a video she did at a Mises event a year and a half ago, which I watched. And I reached out to her. I want to do an interview with her. She's awesome. And then it turns out that she thinks I'm awesome, which is really cool. So it's going to be a mutual appreciation society. Okay, so, but the point being is that the point that she made is that when you think about it, or at least I'm going to make, is that system is so fragile because it's so cocked up. It's a mixture of all these different ledgers that need 3 days to settle, and it's complicated. It's got all this stuff. So you can imagine if the grid were to go down tomorrow and you're going to try and bring those assets back up, okay? Spin those ledgers back up. How long would it take the banks to rectify everything? Bitcoin, once there's a node gets back up online in any way, the network is running again.
Yep.
Yeah, transaction times may be slow. Yeah, the hash rate may not be great. Yada yada yada. There may be even some 51% attacks, but eventually the system there may even be windows for 51% attacks. I'll say that, but I sincerely doubt it because of the way the SHA-256 works. Let's just say there's a potential for it. It's a non-zero potential. As opposed to today where it's absolutely zero, because Bitcoin well past in like 2011 past the hashing rate needed was greater than to break it was greater than the computing power on the planet. Wow. Right? Oh yeah, we've been there. So we've been so far ahead. The Bitcoin network is so freaking secure. It's unbelievable. So that system will come up and running tomorrow because it's peer-to-peer, right? The code's running, the ledgers are all there. People with their wallets, as long as one version of the blockchain that's valid, exists somewhere, anywhere in the world, you can rebuild the Bitcoin network, and it'll be back online in 3 days. I will bet you dollars to dog shit. It'll be back up in 3 days,
and you'll still have it, and it can't be confiscated. And I think what it's going to take, Tom, is gold. Those who don't get. They get gold and silver, but they don't get Bitcoin and Litecoin and the other digital assets, right? It is a paradigm shift. Just like the internet. My dad doesn't get how I can order his checkbook. He still has checkbooks, right? How I can order a checkbook.
No, it is. And technology has always changed the definition of money.
Yes.
Okay. Another point that Caitlin Long made in that same video. I should send you the link. It's a really great talk that she had. It's a really great talk.
The printing press would have changed the nature of money.
Absolutely.
You'd been able to print paper.
So now we can print paper banknotes and we can circulate them en masse, yes.
And now we have internet decentralized money in the form of Bitcoin that's fungible, store of value, and all the other qualities of money, and not currency.
And again, this is not in any way to denigrate gold.
I have both.
None. And no way, manner, shape, or form. I'm like, I tell people all the time, they ask me, what should I do? Right? What's your plan of attack? And I address this in my first issue, the inaugural issue of the newsletter. You sign up for $1 on my Patreon, you'll get the inaugural issue of the newsletter where I explain my philosophy on how investing works and how you should look at things and why it's gold, goats, and guns, and it's in that order, right? And I think we touched on this last time. But gold is first. It's your savings. And your first savings should be one in your dominant currency that you need to be able to get through your life. So it's pounds for you, it's dollars for the United. For me as American, it's Turkish lira for somebody living in Istanbul. That's what you need to get through your life. You need to have a certain amount of that saved. 3, 5, 6 months worth of rainy day, worth of emergency funds. Okay. After that, you should add some gold and or silver, preferably gold at this point, not as much silver. as your next level of protection. Because now if the value of the cash drops, then the gold will hedge the cash, right? Then next, after gold, then you should add a little bit of crypto assets. But understand that from a investing perspective, that there's volatility risk. There's not currency risk at this point. Well, it is. It's volatility risk and currency risk, but that's fine. It's yet another thing, and that's your savings. And then once you're there, then you can start investing in things that have counterparty risk. But these are the things that you should have. And cash starts out with, the only reason you accept cash, even though it has massive counterparty risk, is because you have to live your day and you have to live your life, and it's the thing you need in that has the greatest time value to you. And it's exactly what we were talking about with LIBOR, the LIBOR curve inverting earlier, is that I need dollars now. I need euros now. I can't wait till tomorrow. I need them. I can't work without them. So you need them. They're a necessary evil, right? But and you have them, and everybody should have a store of them in your own house. Jim Sinclair, the great gold trader, said years ago, we have to start thinking about ourselves becoming our own central banks, having our own reserves, and then building a portfolio of assets based on that. And then from there, you can start. So once you have that base, then you can start moving out into investments that have counterparty risk, stocks, bonds, this, that, real estate, yada, yada, yada. And then you can start moving into those other asset classes and deciding how you're going to take that core of savings and basically lever it up. Extras pyramid, right? And that's what we're talking about. And when you keep those images in your head, and that's what you're doing, you have a very clear path as what you want to do. And then once you started investing, then the guns come in, and goats represent that. They represent industry. They represent investment in your industry in your time. Savings, industry, and then defense. How do you defend yourself against somebody trying to steal your industry and your savings? It's very simple. You know, it's a very simple metaphor, but I think it works very, very well to get it down to brass tacks as to what you should be doing and how you manage your own money. Because if you think of things in terms of gold, goats, and guns, then when you go to talk to your financial professional, he says you should buy the synthetic CDO because it's paying 9% and it's AAA rated. You look at him and you go, no, I don't want to do that. Gold's at a 5-year high. I think I want to buy a gold mine. I think I want to take that risk on by buying a gold mine. Can you recommend a good one, a couple of them to me? That would be good. Thank you.
Yes. Or Bitcoin.
That's what I'm trying to teach people. That's what I'm trying to give them, is the power to understand what they're doing and educate them in such a way as that they can make very good decisions. So when their professionals say X, you can push back and say Y.
Yeah, but also not just be your own central bank, but also be your own financial advisor. Do your due diligence research, get into it, find out, educate yourself, right? Now, talking about central banks and Bitcoin, because there were a few subjects we decided we wanted to talk about, right? So I want to move this one a little bit, which is to the Central Bank of Italy.
Yes.
Now, there was an article in Zero Hedge the other day, which they said that the EU has said to Italy, do not take control of the Italian gold, the third largest ordered, published reserves. We don't know how much China's got, right? And we don't know if
really honestly Russia either, to be honest with you.
Yes, yeah. So the US, Germany, and Italy in that order, right? Italy has the third largest, and the Italian government are going to put through legislation and say, okay, we're going to take hold of our gold from the central bank and hold it in government hands, coffers, for the people. And the European Union has said, no, don't do that.
Yeah, so what's happening here is, it's a draft bill that the Lega, the nominally ultra right wing party, they're center right. They're not even ultra hardcore right. They're just left of Marxists. So now they're Nazis, right? It's just ridiculous. So so Lega has introduced a bill draft bill to say that they want the Bank of Italy to sell the sovereign gold of Italy back to the government at 1930s prices. By the way, they want it sold back for what they sold it to them in the first place for. Okay, fair enough. And then pledge that this gold belongs to the people of Italy. Now, when they signed the Maastricht Treaty, Italy effectively signed over their gold. As I understand. If I understand things correctly, the ECB actually effectively has control over the gold. Title may still lie with all the member states are this way. If you once you got onto the euro, I went through the opinion from the response from Mario Draghi, the head of the ECB, and that the Bank of Italy has the gold in order for them to be able to function and operate independently and set independent monetary policy. And this is laid out in law. This is laid out in the Maastricht Treaty, and this is what Draghi will argue legally. I think he's out over his skis here. Okay, I do. But at the end of the day, that's his job, is to defend the euro and to defend this, and that because they have to be independent. Therefore, the Bank of Italy's gold cannot sell that gold. They need those assets in order to be able to conduct proper open market operations as the Bank of Italy and as set by the ECB monetary policy that's handed down from the ECB. Because look, the Bank of Italy is not independent. It's
owned by private banks.
Effectively, it is told by the ECB what to do.
Yeah.
Okay, and so Draghi understands, and there's something else that goes along here. And I think you and I might have talked about it, but I know I've talked about it a lot. I've written articles in both Strategic Culture and on my blog about this situation. That the Bank of Italy is owned primarily by the largest banks in Italy. It's a privately held institution, just like the Federal Reserve, and that then all those banks are insolvent, and all those banks are in arrears to the ECB via Target 2 for hundreds of billions of dollars of sovereign debt that the ECB has bought, laundered, and moved on to and stuffed onto the balance sheets of other central banks throughout the Eurozone, including Germany, including France, and everybody else. So if the Bank of Italy doesn't do what the ECB wants them to do, the ECB can cut them off. Worse, they could nationalize the bank effectively, and then by definition, in my mind, if Monte dei Paschi or Unicredit goes under, and the ECB takes control of it and then sells it to Deutsche Bank for $1, Deutsche Bank now has legal claim to, excuse me, Italy's sovereign gold because it's owned by the Bank of Italy. So what Draghi did the other day was to engage in all this legal ledger domain. And again, I may have this a little wrong. I'm going on. This is interpreting what he's saying.
Let me just, Tom, if anybody has any information about this, put it in the description below as a comment.
Absolutely, because this is a very, very complicated issue, and the best source I have on this is a man that I've been talking back and forth with for years now about specifics within the European banking system and how all this stuff will work, and it ties into Brexit and how that's got to be taken care of, and the mechanisms by which we can these countries can actually get out of either the European Union or the Eurozone in the first place. And the way these treaties were written, that's very difficult to do. Okay, they were designed to be Hotel California. You enter, you can't leave. So the thing that has been worrying me has been what happens when Monte dei Paschi dies. Does that get transferred to Deutsche Bank? And if so, then what happens to who owns the sovereign gold? The Lega understands this. Lega also understands Matteo Salvini and his ministers. They understand the problem here. So does Five Star Movement, by the way, even though they're nominally leftist, right? They get it. If you'll read in the papers that the propaganda here is that, they just want to take the gold and then sell it on the open market to pay for all their profligate spending. That is not what they want to do. What they want to do is make sure that they own that 2,400 tons or 2,500 tons of gold, and then if they ever need to exit the Eurozone, they have title and claim to that gold to issue a new lira. Yeah. Okay. But that's their goal here, but that's what they're trying to defend themselves against. And the other side of that is that politically, that's actually not what they're trying to achieve at all. What they're trying to achieve politically is to get the Italian people to understand that the euro is the thing killing them and that the EU is the problem. And you do that by every time Salvini opens his mouth, he is pushing the EU into being the bad guys and having them overreact and having them bluster and having them bully and everything else, just like Trump is doing to Iran, because they think they have all the power when actually at the end of the day they don't, because in the long run, they don't have the will of the people behind them, and all they're doing is creating more and more opposition to them.
Yep.
In the long run, and that's why Lega's numbers keep rising and all that stuff.
The EU does not govern by consent.
No, at all.
And that is flawed, and that's why I think it will not sustain. And I imagine for Italians who know about this, or if they were to discover, wait a minute, our gold
is actually effectively under the control of the ECB.
Yeah, that they're not going to be happy about that.
No, they're not. So Salvini has a little Trump in him, right? It's what Trump is a master at. This is what I'll give Trump mad props. Trump will say something off the wall, then that's tangential to the actual issue at hand. The perfect example was him bringing up Anthony Weiner or Huma Abedin during the election, so that everybody would look into Anthony Weiner to see that, you know, that there was a problem with the emails and that's where he wanted them to go. So he's leading them that way. It's the same thing as Salvini does. He creates tangential issues to get people to look into what's going on. Why is he talking about gold? Why is he? What does this matter? No one's talked about the sovereign gold of Italy for 25 years. No one gives a shit. But okay, and then we have at the same time they're talking about wanting to issue a parallel currency called the mini bot. Okay, and then we start to look at the situation, which is that if you're going to prime people to leave the eurozone, the only way to do so is to introduce a local parallel currency. Because the Italian people, rightly so, have distrust of going back on their own currency because the lira was mismanaged for centuries. And fair enough. I'm Italian. I get it. I'm fully, I get it. These people are fundamentally anti-government. I like to joke that we Italians, ran the world for 1,000 years and realized that it's a mug's game. So we actually just have no respect for government whatsoever, which is why the average Italian government only lasts 18 months, and it's mostly just political theater to them at the end of the day. I mean, really, I think that is the Italian ethos as far as government is concerned. I think that's part of the reason why when the shift from public to private will happen, I think Italy's ground zero for it.
Yes.
Much more so, unfortunately, than even the UK. And even though I'm like 100% behind Brexit, I think that there's still this kind of functional split here with the United Kingdom, and there's still, I think, a little bit of a pining for the empire thing that's still there, and the pride of that is still, it's still a cultural thing with y'all. I mean, and rightly so, you ruled the world for a while, but at the same time,
those days are over.
Those days are long gone.
Now, it's all of this stuff, from my understanding, with Italy comes to a head in September, right?
With the budget
and everything. And this is what I think is likely to happen. They get all this legislation passed and stuff, right? It creates a ruckus within the EU. You get Italy against the EU head to head.
Yep.
And it exposes even more the weaknesses and the contradictions within the EU.
Yep.
And that could actually spur Brexit.
Oh, yeah. No, absolutely. There's that. And remember that the real fight in Italy is not the EU versus Italy. It's Italy versus Italy. It's the troika of technocrats that actually work for the EU. That's the President Mattarella. That's the finance minister Tria, and that's the Prime Minister Conte, all of whom were approved by Mattarella and by Brussels before Salvini and Di Maio were allowed to even form a government in the first place. So like Trump, they come in as reformers, but they've already been shackled that nothing important is going to change and that they got to deal with those guys first. So the real fight here is to get rid of Mattarella, get rid of Conte, and get rid of Tria. And there could easily be a fight for the future of the current coalition first. And I've already gamed some of that out. Again, I've written a lot about this, and I urge people, if they're interested in it, to go check out my website and look up some of this stuff. All this stuff winds up on Zero Hedge. So I just published an article in Strategic Culture yesterday called "The Euro Refuses to Admit that the Mini Bot is Coming."
Yes.
Right? Okay, but it's coming. I had a patron tell me the other day he's going to Turin for the summer, and the hotel manager told him expect to pay a mini bot. So it's coming. It's coming.
Now, what will that do with the euro? I haven't quite worked that out. I don't have the finance.
It's very complicated, but at the end of the day, what the mini bot will do is it's going to be a small denomination bill of treasury. So it's going to be a small denomination bill of against that the government will accept for fees and taxes and whatnot in order and it will trade as a discount domestically to the euro, so that will open up the Italian domestic economy. And again, the euro's not good enough. It's overvalued, and and the euro is hoarded because of the amount of debt that's out there. So what the mini bot will do will free up. It will add currency to the Italian economy to allow Italians to trade amongst themselves, coordinate their labor and all that stuff, and then leave the euros to handle all the debt payments and the external liabilities that they need in order to do trade. And they don't need them also to liquefy, domestic trade. And the parallel currency system will work just fine.
Yeah,
that's what will happen. They will trade at a significant discount.
Well, the other thing that it does,
25% or something like that.
It gives the Italian nation, through their government, their elected government, control of money. Money.
And it's a good stopgap to get them back to the process of trusting the Italian government to, get off the euro without it being a tragedy, because it could easily be a tragedy.
And back it with gold should they choose to do.
And then they still have their sovereign gold to attract international capital. The sovereign gold will not actually be backed. Well, it's not there as an official backing. What it's there for is to say to international capital, yes, they still have these gold reserves. And then they're running a primary budget surplus, and they're doing this. And the Italians are running a trade surplus. FYI, no one talks about this. The Italians are actually running a trade surplus. They're running a current account surplus. The Italian government is actually flush. They're running a budget deficit, which is driving the EU nuts, because the EU doesn't want Italy to grow. The Germans want the Italians weak, and they want all of their ports. Don't you understand? That's what this is all about. It's what they did to Greece. Yes. This is World War II redux as financial warfare.
Yes. I agree with you on that one. I didn't know that about Italy. I didn't see it from that way. Definitely,
but it's the same thing they did to Greece. Whenever they restructured the debt, they'd sell another port to a German company.
The way the British
stripped Greece, and they want to do it to Italy as well.
The way the British did it with India, but through physical occupation, Northern Europe has done that with Greece, and they can get how they want to do it with Italy. Now, what's going to happen to the euro when the mini bot comes in?
So, not much. I don't. In the short term, in the reality, not much. So the euro will probably rise, right? Because a little bit, because it'll actually stabilize the euro by allowing Italians to bifurcate their debt portfolio, right? But what I think is actually the Ambrose Evans Pritchard, who I don't normally like very much, but he's because he's an establishment shill, but he has good sources. And he's not bad. What he said the other day about this was that what has to actually happen is not that Italy leaves the euro, it's that the Northern Bloc actually leaves the euro and goes back to their own currencies. That the Dutch and the Germans and the rest of them, they're all keeping the euro overvalued. And the most amicable split here is for the Germans, who, if they refuse to get off their austerity kick, to just reissue the Deutschmark and go back on their own currency, and then allow the rest of Europe to trade on the euro. Now, in the long run, what will happen, of course, is that the euro, then there will be the same imbalances will show up in the euro 5 years down the line. The Italians will be too strong. Slovenia will be too weak, and then Italy will have to leave, and then Slovenia will be, what I mean? And so eventually the euro will just fall apart anyway. But by that process, it'll process by people leave the euro, the strong leave the euro, not the weak, right? And that's very possible. And it'll be interesting to see what happens in Germany politically, because the Greens are rising, and the Greens are absolutely Euro integrationists, par off the freaking charts, right?
Doesn't make sense.
As opposed to AfD, who would be happy to have the Germans go back to the Deutschmark. So. Yes. That's going to be the interesting split, the interesting fight in German politics going forward. Right now, the Greens are winning, but we'll see what happens, because remember, you've got the three AfD stronghold states: Saxony, Brandenburg, and oh God, it always leaves my head. Right, right. I try to do this. Like, what's that?
Bavaria,
Thuringia, and those three states are all going to elections in September and October. So AfD could wind up winning the council seats, right? The prime ministerships of those three states, and that would change the German electoral map completely. And they would surround Berlin, who's now controlled by the Greens.
Oh my God! Oh my God! Oh my God, which is like what you're having all over in France and in the UK, where you got a metropolitan, like in the south.
And then we have Brexit at the end of the month, and then we have Brexit on the 31st. And dude, when you look at all, I keep looking at September going, and Mario Draghi stepping down as the head of the ECB in October, and if Jens Wettmann, the head of the Bundesbank, winds up being the new ECB chair, which is what the Germans want, but but now Macron is pushing back against that because France wants control of the European Union. So we're now into Game of Thrones stuff. It's just Game of Brussels, and it's really crazy, and it's going to be interesting to see how it plays out. And I think the very savvy Italians have mapped out the right path through this, and they just keep putting pressure, and they keep pressuring Europe, and Europe keeps like making mistakes left and right. So it's going to be very interesting to see how this plays out. I think the September, October, end of this year, that fourth quarter is going to be explosive overall, and it ties back when you start talking about Bitcoin as a safe haven trade. Yeah, I know we like pumped and dumped in the last 24 hours. We're doing this on the 27th. I don't know, with the halving coming in May of next year, and we haven't even touched on this, and I know we're over an hour. The possibility of, and people front running the halving in the Bitcoin market right now. That's what they're doing. Front running, meaning they're anticipating that the value, so they're getting in front of the trade now. The possibility of Bitcoin trading in the $50,000 range is what has got people excited now. And then there's a little bit of FOMO, and then yada, yada, yada. So there needs to be a good solid shakeout in the cryptos for a couple of weeks or even a month or two before it takes on to the next leg. And I think that would be very technically very, very strong to reset this market and reset everybody's expectations, and then see us move forward. And then as everything starts to explode in 2020, 2021, you're in the right. This is the right corner of the world of the financial world to be in. I have no doubt.
Yes, and you are the right person to be talking to and listening to. Politics, gold, Bitcoin, right? And then something I want to acknowledge, Tom. I want to acknowledge that I don't think you have. It's like it's in the background of all you're speaking. Is your stand for justice and your love for humanity. That's what I want to acknowledge, right? Whether you're Jewish or Arab or American or Italian or French or whoever, right? Be safe, live at peace.
Please, that's what the whole art. The only reason that I've spent the last 15 years of my life analyzing these systems this way is to try and figure out what's going to happen, and to try and prepare people as much as humanly possible that they can be as safe. This is all purely defensive strategy here, and the criticism. I will, when I get on my high horse and criticize, it's purely from a humanist perspective.
Absolutely.
I don't care. I'm done listening to people, argue about, old enmities and old grudges and this, that, and I don't care. At the end of the day, shut up, go about your business, trade some blue jeans, make some chocolate, do your thing, man, and be done with it. And if everybody would just stop doing this, and it's so obvious that these power brokers and these people who have power it's anathema to them to give up that control. And control is the thing that we have to always understand. So where's the, libertarians always say, where's the gun? Where's the gun to control? It's all about control. And control is an illusion. And paranoid people want control. And paranoid people become psychotic people. And paranoid people with power become psychotic. Period. History. Writ large, hundreds of millions of dead people, billions of dead people because of this. And I've got no patience for it. None. I have zero patience for it. And I don't care who it is. I don't care if I voted for the guy. I don't care if he was my best friend yesterday. I have no patience for it. Zero. Because you can't if you want to survive this. Because this is where we are.
Yes.
But I can't. But all I can do, like you and I, all we can do is try to inform people and try to persuade them that we're right. Because we can't force them to do anything.
Yep, and slowly build up some Bitcoin, some gold, some silver, some guns.
No matter what you do, every time every time a dollar leaks out of the financial system, it's not coming back, and they know it. Now, what's interesting about this run in Bitcoin is that there was a lot of institutional money moved in. Now we're moving up to the end of the quarter. Tomorrow is the last trading day of the quarter as we're doing this. So I think there's going to be I'm not surprised by the pump and dump. Let's put it that way, right? Because fund managers are looking to cash in and cash out, right? In order to be able to write and on a Friday afternoon, write that I made X amount of money this quarter, because their bonuses are based on how much money they made that quarter. So when we get times to the end of quarter like this, and then there's other people, then there's the controllers who want to make sure that they paint the tape to make the charts look bearish or bullish, depending on their position, where they're positioned in the markets. Quarterly closes are incredibly important, incredibly more important than any other closing price in markets. If you look at no other chart as a person trying to understand markets, if you just look at monthly and quarterly charts, certainly quarterlies, monthlies will give you signals about where the quarterly charts are. And I do this regularly on my patrons. I do 2 podcasts every week of about a half an hour for my patrons at the $4 level, where I go over events of the day and then do a technical analysis of gold, Bitcoin, the Dow, oil, the euro, the DAX, whatever. If somebody says, I want you to look at, I don't know, Bear Stearns or Goldman Sachs, I'm like, okay, I'll bring up a spreadsheet, I'll do the thing. Is to teach people how to read a chart, how to understand price action, so that they can make good decisions about when they do decide to say, yeah, it's time to buy some gold. This is a good time or not a good time, and then get a chart read, and you keep them updated as to what's happening, and then tie that to all this stuff. I do this every week. I do it twice a week for people. I think it's probably the cheapest financial chart school you'll ever get. I mean, yeah, you can learn how to read charts via Investopedia or Wikipedia or whatever, but you're not going to learn it. You're not going to learn it this way unless you have somebody to teach it to you.
Yep. Okay, Tom, we need to stop, if only because we have other, but I could talk to you for hours and hours. There's so much, right?
We'll do this again. So let's not wait a month or 6 weeks to do another one, Rich. Let's do one in 2 weeks or so.
Absolutely. I'm sure there'll be plenty of stuff happening that we can talk about. Really appreciate you coming on. All the links in the description below. If you've subscribed to my channel, subscribe to Tom's. If you subscribe to Tom, subscribe to mine. If you subscribe to both, great. Please comment, thumbs up, likes, all of that stuff. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Tom signing out. All the best. Bye-bye.
Bye-bye.